So this is the next series of videos. We're going to take a look at the income statement. What I wanted to do to start this chapter was just give you a general overview of the way the income statement looks, because we really, in this semester, compartmentalize it. We look at all the different components, and when you read through the content and when you read through the text, you'll read a lot of information about minimum disclosure. And minimum disclosure gives us an idea of what's the minimum amount we need to show on the income statement. It also guides us as to which sections belong on the income statement. The first section that's on every income statement, you would hope, is continuing operations. And continuing operations is basically your day-to-day operations. So it's all the revenues and expenses that you generate from your day-to-day business. There can be some ancillary revenues in there that are spawn or are part of or a spin-off of your day-to-day operations, but in general this is the ongoing stuff. This is all the revenues and expenses that exist this year that you would expect to exist next year, right? We have a couple of different ways that we can present this, but this is the core of the business. This is the section of the income statement that you are absolutely most interested in, and you'll see why, and we'll talk about why when we get to the end of this. Like I said, there's two ways that you can identify or present this income statement. You've probably heard the concepts of single-step and multi-step income statements, and I'm sure you've looked at them in your previous semesters. When we talk about single-step and multi-step, I think your world so far, like your experience, has had single-step and multi-step relate to the entire statement. Right? So when I tell you to do a single step statement, it's your entire financial statement. That's your view of it, or your entire income statement. When I say multi-step, again, that's what you view as your entire income statement. Well, in this semester, when we talk about single step and multi-step, it only applies to continuing ops, nothing else. So your day-to-day activities can be grouped together in a single step or a multi-step format. There will be separate YouTube videos that go through both the single step and the multi-step and break down the components of each. Obviously the single step, there's one general step. It's really easy. You show your revenues all together, you show your expenses all together, and then you show your net income. So it's very, very simplistic. And the second option is your multi-step income statement, which is obviously a lot more convoluted, has different sections, but also provides a lot more information to the financial statement reader. So there's a trade-off, effort versus value and usability, I guess. So your first section is always going to be continuing ops. So when you're working through your income statements for me, your first section we're going to focus on continuing ops. So the textbook talks about intraperiod tax allocation, and in its simplest form, what they mean by intraperiod tax allocation is how often do we need to calculate income tax expense? Is it on every single item within a section, right? And this is section 1 here, continuing ops. So do we calculate it for every single item, or do we do it for the entire section? And for the continuing ops section, we calculate income tax once for the entire section, all right? So those are just some of the core concepts to keep in mind. The next section that we have on on our income statement is our discontinued operations. Now, discontinued operations are essentially segments or asset groups of a company that we've decided we're going to dispose of, or that we're no longer going to be using in the future. So what we have to do is we have to take our results from those discontinued segments and we have to segregate them, we have to separate them from our continuing operations. Kind of makes sense if you think about it. Imagine you were looking at investing in a company, or imagine you were the manager of a company and you were trying to get investors interested in your company, right? You could have a discontinued segment. You may have had an extremely unprofitable section or segment of your company that you've decided is not salvageable. There's no way to turn it around, so you've therefore decided to discontinue that segment. Wouldn't you want your financial statement readers to make decisions, investment decisions and valuation decisions based on continuing operations and what's going to be there next year, right? Imagine that our net income after tax from continuing ops was 500 grand, but our discontinued operations for the year had a loss of 400,000. So at the bottom of this income statement down here, we're going to have a net income for the entire thing. Well, if continuing ops is 500 grand and discontinued is negative 400, that means our net income is going to show $100,000. But if you think about it logically, what should be there next year? Is it going to be the $100,000 or is it going to be the $500,000 from continuing operations? And the answer is that you would expect continuing operations of $500K to be what your income statement will look like, give or take, next year. So you want your readers to be able to see those two segments broken apart so they can make informed investment decisions, and that they understand that, you know, those discontinued ops, that won't be there next year. Yes, it hindered us this year and it's impacted our statement this year. Next year shouldn't be there, right? So you want external readers, you want shareholders, you want even internal management to be able to see that, identify that, and make sense of that, right? So your discontinued operations. There's a few tricks with discontinued operations and extraordinary items in general. We'll talk about those at the end. And again, it has to do with that intraperiod tax allocation and how we deal with it. The next section that's on your income statement, after continuing ops, right, you're going to have a subtotal for your continuing ops. You're going to add in discontinued operations, okay? You can have another subtotal. It's totally up to you presentation-wise, whether you want to add another subtotal in there. But the next section that we need to talk about is extraordinary items. And we'll get into some more detail on extraordinary items, but not too much. You've been exposed to them, and with the new guidelines coming out, and I still have PE gap on here, I believe they've changed it to ASPE as the accounting standard now for small business. But extraordinary items isn't allowed for IFRS, right? So reading the text, you should have noticed that they have a discussion now, the difference between PE GAAP, which is for small privately owned companies, and IFRS, which is typically going to be used by large publicly traded companies. It has to be used by large publicly traded companies. So IFRS rules don't allow an extraordinary items section. So if a building gets destroyed because of a tornado or a flood or an earthquake, something that's not common, that doesn't happen in your area, wasn't part of a management decision, all of those criteria that make it extraordinary. Even if that happens under IFRS, you're not allowed to show it in a separate section. You can segregate it, but you can't show it in extraordinary items. You have to show it as a separate section up in continuing ops or as an abnormal item. PE GAAP is the only one that allows extraordinary items. I think the main reason for this is that the interpretation of extraordinary items was really open to vague and allowed too many different types of interpretation. So some companies were either misusing it intentionally or unintentionally, but the gist of the matter was that it wasn't being used properly, and so for IFRS purposes they've decided to get rid of it entirely. You don't see many extraordinary items sections on income statements anyways anymore, but you do have the option under PE GAAP or ASPE, as it's now called, to break that out and show those items separate from your continuing ops. Again, our intention and our goal here is to give the reader of our financial statements as much information as possible, delivering it in an accurate manner so that they can make informed decisions as to our results. Again, if we didn't break out or somehow show the cost of a tornado destroying our warehouse, if we didn't somehow break that out and show that cost separately, the readers may think that's a normal part of our operations, which it's not. Okay, and then the last section. This one's going to be brand new to you. This last section is called Other Comprehensive Income. So we start with continuing ops all the way up here at the top, right? We have two options for doing that, single step and multi-step. And then we calculate tax once for the entire section. And then we move on to our discontinued ops and our extraordinary items. In between extraordinary items and OCI, which I'll refer to it as quite commonly, OCI, Other Comprehensive Income, this is where you'll see your net income, right? This is where your bottom line net income is. Then what we do is we have this Other Comprehensive section, and at this point for you guys, We'll get into this in more specifics later on in the semester, but for you guys, for your world right now, when we're looking at this chapter with the income statement, you're looking for a keyword, and your keyword here is unrealized. Most of what happens, or most of what flows through your OCI account or your OCI section, are unrealized gains and losses. So it could be anything from an investment that we're just adjusting to fair value but we haven't sold yet. It could be anything that deals with an unrealized gain or loss. That's typically what's going to flow through this section. So what we have is, after extraordinary items, we would have net income. Then we would show our OCI details, all of our OCI items, and at the very bottom we would have a line item which is called comprehensive net income. Most of our financial statement readers aren't going to be overly concerned with the OCI section. They're going to be most concerned with this continuing ops section and our net income that's, I guess, generated overall. Okay? So those are the sections. So when I look at this and I look at my continuing ops, I said that we calculate income tax once for the entire section. The other sections have a few unique things that are consistent across each of them. So for discontinued ops, extraordinary items, and OCI, we're going to show each individual item after tax. Okay? So with continuing operations, we would start with some revenues and we would subtract some expenses. Depending on if we're doing single step or multi-step, you might have a cost of goods sold and a gross profit margin breakdown in there. But at the end of the day, we're going to show all the raw numbers, calculate a subtotal, and do the tax once. Well, for discontinued ops, extraordinary items, and OCI, we are going to show each individual item separately, and we're going to show it after tax. What that means is, I don't want you to show me all the revenues and expenses or all the items, add them up, and then do a single tax calculation. If there are two extraordinary items that happened during the year, you had an earthquake and a tornado, you can't combine them. You show them each separately and you show them after tax. Discontinued ops, what you will be faced with this semester primarily is two things: results from operations and then gains or losses from the disposition of the assets. Okay? So if I give you information in a question or on a test and I say that there's discontinued operations, results from discontinued operations is X dollars, and losses from sale of discontinued assets is X dollars, you have to show each of those items separately within this discontinued ops section, and you need to show them net of tax. Okay? And the last section here we need to look at really quick is EPS. You're going to have to do an EPS calculation with me for sure. When you take a look at the minimum disclosure guidelines that the textbook talks about and the chapter discusses, you'll notice that EPS has to, absolutely has to, be on the face of every income statement. We'll get into more details on this when we talk about EPS, but what you'll find is that EPS has to be done at a minimum of once. So but possibly more often. So if we do an income statement and the only section we have is continuing ops, imagine there's nothing that's discontinued, imagine there's nothing that's extraordinary and no OCI. We would calculate one EPS. It would be based on the net income from continuing ops. But if you have discontinued operations and or extraordinary items, you have to calculate EPS twice. You calculate EPS based on the results all the way up here of continuing ops, so whatever the net income is for this section, you calculate EPS, and then you come all the way down here, and after we subtotal up continuing ops, discontinued ops, and extraordinary items, you're going to calculate a second EPS number based on that subtotal as well. So that's the format of the income statement. In FOL, I've given you a template of some of the common items that are available in each section for a multi-step income statement. So you can go to use that, and what I would recommend is using that as a template while you're working through your income statements for the first little while until you get the handle on it and want to start trying it on your own. I've color-coded it to match this slide in the presentation. So all the items, all the section that's continuing ops is blue, the section that's discontinued is pink, and then obviously extraordinary items is purple, right? So I would use that as a guide as you're working through these statements. That's the end of your intro into the income statement. You're really going to need to focus on presentation. Okay, you have to understand what is shown net of tax on the statement and what isn't. You'll have to know when to calculate tax, when not. You'll have to know what belongs in each section of the income statement. All right, and you'll obviously have to know how to do or what sections exist. So what I would recommend is basically come back here and you see this income statement right here. I would draw this out probably 15 times until I had it memorized, so that I know continuing ops is first, and I can do it single and multi-step. Discontinued ops is second, and it's each item shown after tax. Extraordinary items is third, and each item is shown after tax. And then OCI is the last section other than EPS, and again, it is shown net of tax. So draw that out a bunch of times, because then when you're doing your homework, you can create your little shell with your titles, and then you can just start slotting in the information as you work through a question. So that's the end of the intro, and we'll get into single step and multi-step income statement in later videos.